All right, what's up, everybody? Welcome to CRL. This is Chart Request Live, the show where you provide the requests, we provide the charts, and then we all go home happy. I am Spencer Israel. That's JC Perez. JC, what's doing?
Oh, just interesting market action over the last couple of days, seeing maybe some of the implications perhaps of a dollar stabilizing and not ripping every day. Bonds have not been collapsing for a couple of days, and stocks seem to like it when there's stability in the Forex markets and in the bond market. We say it all the time here. Now's no difference.
Or this time is different. No, it's not. Okay. All right. You know the drill by now. If you have a request for this show, you would do well to email us. The email is scrolling at the bottom of the screen. Questions at stockmarketmedia.com. We go through the inbox questions first before we get to the requests in the chat. That being said, let's take a look at the board. I'm starting with a question from last week. Credit to did I write down who it was? Credit to so I didn't write down the name. Somebody asked us on like Thursday for a look at some Bitcoin charts. Not so much Bitcoin per se, but any Bitcoin play. They were curious about maybe the miners or maybe Coinbase. They were just looking for an opinion on which of those Bitcoin related charts stuck out to you. So this person was watching Bitcoin before the breakout today. Credit to them. And let's bring up your charts. What chart do we have here?
Yeah.
Start with.
So I wanted to just compare MicroStrategies here, MSTR. This is Michael Saylor's company that owns a ton of Bitcoin, and it's more of a pure play. It's going to be, it's going to be higher beta than Bitcoin, lower beta than the miners. Generally, you're going to get a lot more volatility out of these smaller miners. Marathon being one of them. You could see that underperformance out of Marathon, while MicroStrategies is making higher highs. You could really see the difference there. But you're really, if you're looking for the juice, you're really going to get a lot of juice in in something like a Mara or a Riot. So here, let's look at a daily.
And when you say juice, you just mean volatility. This morning, just looking at today, for example, Bitcoin up 8%, give or take, and Riot's up 10.5%, right? Mara's up 10%. So they go up more, and they go down more, and they go down more. Right?
I think $9. I think $9 is probably your best bet. If you're below 9, you don't want to be in Marathon at all. We're above that, by the way. Last is $9.80. So if above 9, and I think it's fine. And the reason is because look at this resistance right here. This was early on in the year after that initial thrust higher. Then look what you had. You had that that nice base there. This is when we bought it. Remember, Spencer? I remember vividly me wanting to buy a straddle here, betting that we were either going to get a monster move up or down, right? It didn't matter. I just expected a volatility, a move in volatility. Sean actually convinced me not to buy the put, to just buy the calls, because he's like, if it's going to go, it's going to go up. And I was like, all right, we'll do it your way. And boy, was he right. That was one of the best trades I've ever put on in my life. And then I remember when our target was these former highs up here. Which is why these levels are so important. All these former highs back here, those were the targets. And there's a reason why those are the targets, is because the market continues to prove that at those prices, there's more supply than demand. So at this point, if we're back above that, then what ends up happening is that this is just a little bit of a oops, right? Just a little bit of an oopsie daisies, right? And that's when the squeeze comes in. We've seen them before, not to mention the market memory of last time we were at those levels. Look, remember what happened. So a lot of market memory here for a squeeze back up towards 20. I don't hate that trade at all, but again, only above 90. If it's, 9, if it's below 9, you can't touch it. Things like a $2 billion company, $1.5 billion, depending on what day it is.
does that answer the question? Kareem had wanted to buy Marathon, and he's willing to wait like 6 months, right? So, and he was looking for a target, right? So the target would be those old highs of what it was. What was it, 20? I don't quite see it. 17, 20?
Yeah, 20.
Yeah, okay. So yeah, good, reasonable target to have $20 in Marathon Digital.
Yep.
There's Bitcoin, which is up. What I say, 8%
Yep.
today.
So the trade
yeah.
here, I think, is against 31. So there's your breakout that we've just seen. 31 is the level there. It's been the level. We've said it a million times. Above 31, I think you can own as much as you want. Above 31, I think the risk for investors and humans in general is to not be long Bitcoin. I think the opportunity cost of not being in it, if it's above 31, is too great.
I agree.
Too great.
I agree. I mean, full moon. You could see people saying, "Oh, the first time was just silliness," and when it went to $20,000, and that was dumb, it never happened again, and then it happened again, right? And then it happened again. So, how many more times does Bitcoin have to prove that it can make wild moves to the upside for prolonged periods of time? Okay, let's move on here.
And whether it does or whether it doesn't, I think it's besides the point. I think the bigger thing to remember here is that the risk versus reward is skewed so much in one direction that to not have some exposure, I think, is irresponsible. How much exposure is up to you. Whatever you're thinking is probably not enough for most investors, is what I'm saying. I think that's the risk. I think the risk of not owning if it's above 31. And listen, below 31, say what you want. I don't want to be in it. I'm good. Above 31, it's a big one. It's a big binary level.
Isn't it just wild how it struggled at 31,000 for what, 7 months? It couldn't get up there, and then boom, one day, goodbye. Right.
But that's not how it works, Spencer. See, what happened is that what we know from 2021, the summer of 2021, those lows, we know that at those prices, there was more demand than supply. We know that. And then once the market broke down last year in June, that is the market proving that now there are more sellers than buyers. There's more supply than demand at these levels, period. End of story. Not JC's opinions, fact. So when we got back there this year, what happened? There were more sellers than buyers. We knew that already. So we got back up to those levels, and again, still more sellers than buyers. But with every attempt to get to those levels, demand is absorbing supplies to the point where anybody willing to sell at those levels will have already sold, and that's when demand overwhelms supply, and that's when you get the price shoot up. That's what you saw.
Yeah, exactly. Right. Yeah, true theory. Okay, let's move on here. So Dan's looking at InMed, INMD, for a short. He's saying the stock has a 10% short interest. I'll take your word for it, Dan. But he's looking at INMD on the short side.
So this is Israeli medical equipment.
Oh, say no more. Say no more.
I mean,
it's got multiple things working against it. Let's put it that way. Okay.
So short it because it's in Israel?
No, that's not. Don't put words in my mouth. It's got multiple things working against it. Okay.
What?
We know. Well, starting with the fact that the country it's in is in a war right now, and then also the industry it's in, there's been a bit of a train wreck of late. We know this.
Yeah, a lot of a train wreck.
Yeah.
I mean, this is it's really kind of like, this range right here. It goes all the way back, right? It goes all the way back to these former highs in 19. And then this was support, right? So you could really see it. Right. And now we're like, it's attempting to hold it, right? It's attempting to hold it. I mean, 22 maybe, if you want to be short below 22, but this thing's down 60%. So now you're going to short it? Like, I don't know. If I'm going to be doing anything here, I'm looking to it from the long side, actually. This thing's pretty exhausted, but I mean, listen, if you have to be short, you want to be short below 22, knock yourself out. Above that, you can't be short. In fact, I'd rather be long. It's messy here. It's got some work to do. That's how I see that. INMD, Israeli Medical Equipment.
Okay, we got a couple people emailing us about getting opinions on stocks on the short side. Keisha is looking at Citizens Financial, CFG. She wants to short it below 23.
Here we're looking at a $10 billion regional bank.
Again, industry that it's in has been having problems. So you're looking in the right area. Well, I'll give you, knowing nothing about the stock, you're looking in the right area if you want to short stuff.
Yeah, so here you're looking at all of this right here. So this is when it was over. So here, Citizens Financial had actually been showing relative strength.
Oh.
And then, so you see here these former resistance levels from pre-COVID, right? Notice that after the breakout, that turned into support, right? So then once we broke down here, right, that's it. So this is a nice little failed breakout here, and then down she goes. So as soon as she broke 40, that was it. All bets are off. So that's what happened here. So now, moving our way down, here's your support levels that broke down, turned into resistance, right? So here's your support, and then that turned into resistance up here. So that's your stair step, if you will. And then here's your new stair step, right? You're kind of looking at that 24.5 level, something like that. You know, if you want to be short below that, knock yourself out. Right now it's at 23.5, you know, and then from a target standpoint, you know, it's not that, and you know, it's not that clean. You know, it's not that clean. Like, what are you looking at? You're looking at down towards 17, maybe. You know, that's what that looks like to me. It's not the cleanest. You know, you got some more trouble right around here to get through. You know, you got some support potentially around 22.5. Like it's tough. It's a tough short. It's a tough short.
Right.
You know, like I would be worried about this guy right here, you know, right there. So like you're fighting for pennies, I think here. I mean, granted, it could shoot down towards 17, of course. But I think there might be easier trades.
All right. Sterling just emailed us about NVT. The company is nVent. This is a utility. And
NVT is a British industrial. But yes,
really?
Electrical equipment parts.
All
yes.
Right. All right. Same thing.
But yeah, it's in the industrials.
Sterling has been long NVT.
It's not the same thing.
What?
You're like, all right, industrial, same thing.
All right, fine, whatever.
No,
okay.
It's not. Does this look like a utility stock to you?
Sorry, I saw electrical and I assumed it was a utility. My apologies.
No.
Sterling has been long since 2021. He wants to know what you see in the chart, and if you think 58 is within reason.
I do think it's within reason. You know, you can even, yeah, this is probably cleaner here. You know, you can look at those pre-COVID highs, is what it looks like to me. Those pre-COVID highs, this is your stair step right here. These are the powerful levels, but you know, based on where the market is really pricing in these support and resistance levels. So back towards 58, yeah, probably. Yeah, that's probably about right, because here you're seeing this form of resistance turning into support, right? So here's the top at that Fibonacci extension level. Then you got a local high here that's turning into local support. You know, you're probably looking at right around 47. You know, that's probably your level. So you got your 47 to 58. That's probably a good level. $47 right there. Above 47 for a trade back up towards 58 is not terrible. And this is an industrial. So you're not getting right back down towards 200-day moving average. Momentum still in a bullish regime. This is not a terrible place. Starts breaking out above 52. Adding to positions probably wouldn't suck.
All right.
Pays a 1.5% yield.
Here's another industrial, Rockwell Automation. This is
yes.
from the chat. This is from Daniel in the YouTube chat. ROK is the ticker. I'm looking at a monthly. I was like, why is that? That's a big red candle, but that's a monthly candle. Let's take a look at.
This thing has been a beast for a long time.
Candle.
Look at that.
Yeah.
So this is ROK. So this is Rockwell Automation. So this is specialty machinery, industrial machinery. I don't know what's so special about them. I think, you know what's so special about them? They're like they're doing software stuff also. So that's something interesting to keep in mind, which is probably why it looks like a tech stock. You know what I'm saying?
Yeah, well, if you go back to 2000, yeah, maybe. I thought it was a bit of an everything bubble, but yeah.
Interesting. So this is one of those examples where it's like an industrial, but maybe it's not an industrial. Spencer thinks every stock should be an industrial. So here's
in a way.
One for you here. These are the key levels, right? There's no denying it. The market keeps proving it over and over and over again. These are not that clean, but yeah, 280 is probably about right. Below 280, it's messy. It currently is. We're still stuck below these former highs. So this is probably messier. I want to stay away from this. Yeah, this isn't something that I want to be touching right now. Long or short, it's messy.
What about actual software? Workday for Feli? Hope I'm saying that right, Feli.
So this is American software.
Yeah, it's just like a human. It's like a human resources software stock.
Should be an industrial.
Well, look, there's an argument for that too, but
all these human resource stocks are in industrials.
That's what I'm saying.
I know. That's what I'm saying. I'm agreeing with you on this one.
Yeah.
Speaking of hot messes, though, this thing's just like in a big messy box. Like is this the trade you're looking for? I mean, it's messy. It's messy. You're looking at,
but how many non-mega cap softwares will look like that though?
This is a mega cap software. It's $55 billion. Pretty humongous.
That's not mega cap. Is that mega cap?
I mean, $55 billion. I mean, that's a lot. You don't think that's a lot?
No, I mean like hundreds of billions of dollars, right? So, but how many like I don't know, call it $1 to $100 billion software stocks look like this? My point is, this looks like okay to me. I don't know. Yeah.
I mean, it's fine. I mean, it's in the middle of a massive range is really what it is. So there's no real trend here at all. Right. But I mean, there's 55 billion, it's impressive.
Yeah. But just like, I don't know, maybe my perception of software stocks is skewed, but
if you're thinking about like Adobe and like Microsoft and Salesforce is 200 billion, and there's some big companies in there in the software space. So 55 billion is 55 billion. I mean, how many industrial stocks are 55 billion?
Well, right. I don't know. To me, that doesn't look all that terrible. Is the point that I'm trying to make.
It's basing. I mean, this thing had a heck of a move. This thing was up, I mean, think about it. This thing was up 6 times in a very short period of time. It was a 6x, and it's really been consolidating for a while, and they're massive moves within that range. But man, we're right in the middle of this range. You can, if you really want to like get more specific and look at these former resistance levels from back here, you can say, okay, well, if we're above 220, that puts us above these former highs up here. I don't hate that. It's kind of trying to buy this pullback back to those important levels. All right. I don't hate that. 220, something like that. Right now the price of stock's at 210. It's got some work to do, but all right. You can convince me of that, I guess. With a target back up towards those highs near 300. All right. I mean, I think there's better trades, but it's not terrible.
Yeah. Okay, here's one I can honestly say I don't think I knew was a public company. It's from Sazo Pro, BRBR. This is BellRing Brands. These are the owners of Power Bar, and they IPO'd, like actual IPO'd in 2020. It looks like, right? Or no, sorry, was it 19? It was late 19, and I had no idea this company was public.
So they make the power bars.
They make power bars, which I can't have. So I've never had
packaged foods. $6 billion company. Do they make anything else, or is it just power bar?
No, they make other stuff. They've got
protein shakes, protein powders.
Yeah, a lot of protein shakes and a lot of nutrition bars. Yeah, so
St. Louis, Missouri.
I had no idea this was a public company.
It is. It is $6 billion.
I know. That's big. That's
very impressive.
It's a lot of power bars.
It's a lot of power bars. So let's see. So if you take the high to the low, I think you might have a trade here. I think you might have a trade around 41. Right? If you want to extend from here, you got kind of two extensions that you could fight against here. You want to, because when these stocks are making new all-time highs, you need points of reference. So I think here you definitely have a good point of reference that the market is certainly respecting. So that's that 43 level up here. And then you got these former highs up here, which certainly there's market memory here because we keep seeing it coming into play, right? We saw it right here more recently. So that's that 41 level. So that 41 to 43 is really the key sweet spot with a target up near that 56, 58 area over here. That's what that looks like to me, Spencer. You think that's getting too cute, or, you think that's valid right there? So long against 43. If it's above 43, you're long power bars and target in the 56, 57. I don't hate that. I
mean, all-time highs tend to be getting more all-time highs, right? So
so you got the trend is you're not fighting a trend here, so you got that going for you. So yes, that's why I'm I'm very open-minded to, at this point, there's no denying that it's an uptrend. The question is, number one, how high can it go? And how do we quantify that? And number two, where are we wrong? Like, are we just going to buy the stock and hope for the best? Like, we have to see where we're wrong. I think 43 is a good place for that. I think if we're closing below 43, we probably don't want to be in this, sort of how I look at it. If we're below 40, below 40, 41, we definitely don't want to be long this, but I think you can set it up as tight as 43. Not going to lie.
By the way, those premium protein drinks are not bad. Honestly, they're not. Okay,
they're not great.
Here's one. Speaking of all-time highs, Constellation Energy, ticker CEG. This is for PJ in the chat.
This is a utility stock.
Wasn't this like a spin-off of something?
It's renewable energy. This is a renewable energy stock out of Baltimore, Maryland.
Baltimore, Maryland. That's right. Yeah.
Really, really interesting, actually. So this is a $37 billion stock. Speaking of relative strength, this one, is one of these things where it's like it's technically a utility, but as you could tell here, it is it's not, right? There's something else going on here that's making this unique, and why it doesn't look like utility stocks and not being getting completely destroyed. So, this is renewable energy. That's what it is. That's why. So that's your sort of your catch to this particular name. So technically it's a utility, but it's a renewable energy stock. So it doesn't look like a renewable energy chart. Well, because I think that this is more, it sells natural gas. So this is more of a traditional energy play. So this is kind of like almost like an offshore driller, because it looks like the offshore drillers is why I'm saying that, not because it drills offshore, but it creates it's a whole bunch of things. You got nuclear, natural gas. All right. So that's probably why it looks like this. You got traditional energy.
Okay. This was from Exelon, and there was like a spin-off.
Got it. So
that's why I'm confused here. Okay. So this was a spinoff of Exelon last year. That makes sense. And so, yeah, this is or was uh Exelon's power generation business, I believe. And they kept their utility business. What?
Yeah,
I
so
don't know.
this is what this looks like here. So regardless of any of those things, at the end of the day, it doesn't matter. It's interesting, and we like to talk about it and enjoy it. But at the end of the day, I mean, this is an interesting play above 115. I don't hate it. You know, nice base here. We can you can even zoom into the daily chart here. You know, really look at this short term. You know, 115. I like it up there. You know, below that it's messy. 115. That's a good level. Target up near 140. Sure.
All right, couple quick. GE for Joe.
Well, I was just looking at GE.
Oh yeah,
just looking at GE. Someone's listening. I was literally just looking at it because
you know what, that reverse split really did the trick there, because this thing couldn't stay above $10, and now they reverse split. What like it wasn't a 1 for 10, or maybe it actually may have been a 1 for 10. I'm not sure, but since then it's holding triple figures, so good for them.
How about that, huh? So General Electric, you know, an old darling of the market, $123 billion. The fact that it's gotten destroyed as much as it has, and it's still a $123 billion company is pretty remarkable when you think about it. Just shows you just how big this thing was. This is one of the biggest companies in the world. I think it was the biggest company in the world.
I was going to say, I think it was the biggest.
For a hot second, maybe even longer than a hot second, but yeah, so listen, there's obviously market memory here. The market continues to prove that. So here's your flash crash low. For those people who think that those prices don't matter, I'm here to show you that they do, as you can see here, you know, right? Just fascinating, isn't it? So anyway,
yeah, but all right, yeah, that's crazy, because it was there for literally 1 second.
Yeah, so
below 2015.
Below 120, I think it's messy. I think it keeps you in this range here, right? Between 90 and 120, right? So if you're between 90 and 120, I think that's just understand that that's the range currently. I don't know how long it will take to break out of this range. That could potentially take this back towards maybe 190 or something like that, because there's a big vacuum to fill here. There's no question. And if this is a bull market, then I think you're going to see GE probably leading, because it's been a leader already. So this seems to be like a really interesting name that could continue to be a leader, I think.
Wow.
How about that?
I
didn't see that coming.
Didn't see that coming. All right, last one here. Let's look at Lululemon for Rajesh. And it's been a minute since I've looked at this one, so I'm going to guess it is still... Oh, I would have guessed not that chart is what I would have guessed.
What do you mean?
I wouldn't know. I was thinking higher than that. I don't know what I was thinking. I mean,
it's pushing up against new all-time highs. I mean, there's very few stocks that are doing that. This is $50 billion athleisure, consumer discretionary stock. Based out of Canada, eh?
Yep.
And to me, I think you're in this range right here. 312 to 503. We're right in the middle, right around that 400 level. You could zoom in. Why don't we zoom in? So just to put that in perspective, you can go. All right. So here's a zoomed in look at Lulu. Stocks down to 400 today. Listen, you can go back to these former highs up here, right? That's a consistent level that we've seen coming into play again and again and again, right? You see that on the kickback here. You're seeing all this resistance here, so you're probably looking at 400. That's probably your level, pretty much right where we are right now. I think that's probably about right, with a target maybe up near 490 or so. So you're looking at 490 and 400, right? That's probably what you're looking at right there. 490, 400. That's probably about right. That's the range. That's probably the range.
It's a big range. It's a big
It
range.
is. I mean, it's 20% range. It's not that big of a range for 50 billion. It's a $10 billion range. I mean, $12 billion
$90
range.
though. Yeah. $90 though. Yeah, it's a big range. All right.
90 points. That would be a 20% move, ish.
Yeah.
Yeah, it's not a big deal. 27%. Yeah. Sure.
That would be great.
That'll take it to $60 billion athleisure company. And realistically, listen, if we get to 490, realistically, we're probably going a lot higher than that, because this was almost like a whipsaw of a move, like that was just unsustainable here. Throughout that late 2021 action. But the real resistance here is in that 400 level. So to me, if we get back towards 490, well, there's likely to be trouble there, as the market has proven. I think we're probably heading much higher than that. So I don't know what's going on in Lulu, but I guess we're about to find out.
We're going to find out. All right. They're doing a good job. All right. That'll be a wrap for us here. If you have any questions, comments, concerns, obviously always email us at the email on the screen, questions@stockmarketmedia.com. We will not be doing a show on Thursday. So next show is not until next week. So you have a week to get your questions in. You should do that. Hit the like while you're at it. Thank you very much. Thank you, JC. And I'll catch you guys later. Have a good one.
Adios.